Hello and welcome back to this week's Market Minute. I'm Eric Hagstette with Inhabit Real Estate. And instead of me droning on like I do every week, I wanted to bring a guest in to mix up the content a little bit and to inform you on today's mortgage market. All we hear about is the low rate environment and how awesome rates are. So I brought my friend Martin Matsumura from Academy Mortgage to enlighten us and to answer a few simple questions on what it feels like from the lending side in today's market. So Marcus, welcome. Tell us how long you've been in the business and a little bit about Academy Mortgage, if you would.
Thanks for having me on, Eric. I've been in this industry since 1997, so 24 long years.
Wow, I had no idea.
Yes, it just keeps adding up. So yeah, with Academy Mortgage, I've been here a couple of years. Things have been going great. We just finished up a gangbuster year, and we'll do it all over again in 2021.
Oh, nice. Now, and your office is in the Williams corridor, and Academy Mortgage is a mortgage bank. Is that correct?
That's correct. Yeah, we have offices in most every state in the nation. And nice presence here in Oregon. Local underwriting, local funding. It's a really nice operation that we have here.
Nice. Very good. All right, so tell us, if you would, and I know you can't speak specifically about interest rates because it's all dependent on buyer qualifications, but where are these historically low rates right now? Like if somebody were well qualified and came to the office and submitted an acceptable application to you, what kind of rates are they looking at right now in general?
Well, like you said, it does depend on a number of things: credit score, loan amount, location, property type. I mean, there's a ton of factors. But for the most part, we are seeing purchase rates in the mid to upper twos right now.
Wow.
Whether people are paying points, that's also a huge factor.
Mm-hmm.
More often than not, we don't see people want to pay points anymore, which gives them a little bit more flexibility.
Mm-hmm.
But, paying points does give them that lower rate and does pay off in the long run.
Mm-hmm.
But yeah, we're seeing 2.5, 2 3/4. Their rates are very, very good.
That's unbelievable. Now, for those of you that don't know, paying down or buying down a rate, you can do that when you originate your loan and talk about your mortgage. Talk about that with your mortgage officer. It's just another way to get the rate where you want it if you can. Now, question for you, Martin. How many of your, what percentage of your business are you seeing use a 15-year product versus a 30-year amortization on a conventional loan? Like, is there a defining trend in there that you can see?
Yeah, the majority of people are still going with the 30-year fixed. We probably see a little bit more 15s on a refinance if they've had the property for a little while. They've built up some equity. They've knocked down that balance a bit. We'll see some people move from a 30 to a 15 on a refinance, but on a purchase, the vast majority are still going with the 30-year fixed, just for the flexibility, the lower payment, the uncertainty.
Mm-hmm.
Many times when people are buying, that new house payment is going to be higher than what they had before.
Yeah.
So they adjust into it and they don't want to bite off more than they can chew.
Right.
But the 15 years is a great way to go if people can't afford it.
Yeah. But I also can see what you're saying there. There are a lot of people, we're turning over houses a lot faster than we ever have. And so we're seeing people who don't necessarily know what they'll be in 5 years. And so they're going to go with probably the most affordable option on a monthly basis. So that makes a lot of sense. Now, let me ask you this. Are you still seeing a lot of refis coming through, and are people pulling cash out on those refis to do remodeling, or what's that looking like?
We are seeing a lot of refinances. That's a good portion of our business last year and right now. Cash out, maybe half of them, maybe a third to a half pulling cash out. A lot of people want to remodel. That's one thing the pandemic has really forced people to do. People are in their houses from home, their kids are at home. They're realizing that, this is where I'm at and I need to make it nicer. So we are seeing a lot of people pull money to improve their houses.
Yeah. We're seeing that too. I mean, you and I are both in a position where we're seeing so much movement in all directions, whether it's people buying and selling or people staying in place and changing their home to the way they want it. So it's a very interesting time out there. Now, what we keep hearing about on our side, on the realtor side, is these appraisal waivers. Sometimes we're getting into the situation and we get into underwriting once we're in contract, and we hear that there's an appraisal waiver. What is that and how does it work?
Sure. Appraisal waivers, well, we love them. They're awesome on our end.
We love them too.
They're generated by by Fannie Mae and Freddie Mac, the underwriting systems. So the lenders don't decide themselves who gets one. It's Fannie and Freddie and their underwriting systems that decide. We basically need two things. We need the client to be qualified. So credit, down payment, debt to income ratio. We need them to have some solid qualifications. It doesn't have to be 20% down, but that's usually a pretty good start. Mm-hmm. And then the other thing is the house has to have public record data that supports the value. So Fannie and Freddie will have their own algorithms. They'll have their own data. They will look at what they think the property is worth. And if their data coincides with the purchase price and they like the client and the transaction, they'll issue an appraisal waiver. Mm. And in that case, we don't need an appraisal. That saves time. It saves money. It avoids problems. Mm-hmm. It's a win-win for everybody. Yeah. And we're probably seeing that on probably close to 75% of our transactions.
Really?
Okay, we're seeing appraisal waivers. It's pretty common, actually.
I had no idea it was that common. When we get that call or that text message, it's always a nice piece of news. I had no idea it was that common though. So that's good to know. Now, just real quick before we let you go, when you're seeing these tight market conditions, just like we all are, what can a mortgage loan officer like yourself do as part of the team, the realtor, the buyer client? What can a good mortgage officer do to enhance or increase the chances of a buyer getting a property? Is there anything you can do proactively in these multiple offer situations and bidding wars? Just curious.
Yeah, I think on our end, we need to educate the client. We need to educate them on their payment and the numbers, of course, and support what you're saying in the fact that this is a tight market. And they got to come in strong, and they can't come in under offer price and have a realistic chance. So just being supportive of what the agent's saying, so that the client hears it from both us and you, and it's a similar message, and they realize that this is a bit of a unique situation. The market's tight, it's very competitive. If that client wants that accepted offer, they need to sometimes be bold,
aggressive.
They need to be aggressive, and and then if they don't get that offer, sometimes we have to just kind of keep their spirits up,
yeah,
and keep them in the game, because it take multiple offers, and they just need to stay focused. So we just help with I guess just with their attitude and
Right. And of course, being quick and responsive and, available on the weekends, which I know many of our lending partners are ready to assist when need be. So much action happens on the weekends. And so I know from working with you in the past that you definitely deliver. And for that, we certainly appreciate it in these tight conditions. So, as you and I were speaking, that this may be also along the same lines as buyers needing to maybe think creatively and think away, as hard as it may be, think along the lines of something other than a house, maybe a townhouse, maybe a condominium, maybe a small plex property, or something to bridge them into the market just to get a foothold and start building equity. Now, I'm assuming you can finance for the qualified buyer houses, condominiums, townhouses, small plex properties that fall under residential category. You've got all those products, correct?
Right, of course.
Yeah.
And we need to have a lot of products, because everybody's different. The properties are different. The client's needs are different. One thing that I've seen a little bit more of lately is doing first and second mortgages
Mhm.
for people that are in that light jumbo loan range. They need just a little bit more than the Fannie Mae maximum of 548,000. Maybe they need 570 and 590. We might do a first mortgage and a small second mortgage to avoid a jumbo.
Mhm.
And, the reason they might want to do that is underwriting's a little bit easier on a first, second than a jumbo. And you may get that appraisal waiver, which also helps. So just, enlightening them of that possibility that maybe improves their situation a little bit.
Oh yeah, absolutely. And I know firsthand that borrowers get great counsel and advice from you, and they'll get candid, frank, honest information to help them inform their mortgage and real estate decisions. And so really appreciate you being on the call today, so to speak. And I tell you what we'll do is we'll make sure to post up your contact information in the link, and that way people know how to get a hold of you. I'm sure that applying for whether it be a refi or a purchase or whatnot, does that start online for you, or is that a phone call?
At first it's typically a phone call just to kind of assess the situation and see what the client's looking for. But yes, with the loan application, it's typically online. The client creates their account and the application. But yeah, initially we'd love to just chat with them just to see what they're looking for so that we can meet their needs.
There you go. Nice. Well, we'll make sure that all of our audience has your contact information. Really appreciate you being on today. Thanks again, Martin Matsumura, Academy Mortgage, helping us with our mortgage needs in this tight market. Thanks, Martin.
Thank you, Eric. My pleasure.